It's a big week ahead for investors. In fact, it's the busiest week of earnings season. Plus, there's a Fed meeting and a jobs report, so a lot to try and digest. Steve Liesman joins us right now with a look at what we should expect from Fed Chairman Jay Powell and company. And, Steve, I'd say that's probably the most important thing from the market's perspective this week.
For sure. Not that we could take that mid-fall vacation that you were thinking about, Becky.
Wasn't.
At least not, well, I was. This is the week the Fed will meet to decide interest rates and probably wishes it was meeting next week. Key economic data will be reported either on the second day of the meeting or after the decision comes out on Wednesday. Let's take a look. ADP and GDP, they come out on Wednesday, and they both look to be soft. Just 80,000 predicted for ADP payrolls, 1.6 for Q3 GDP. There's the preferred inflation indicator for the Fed coming on Thursday. And then jobs, just 85,000, maybe a little bit higher, depends on what happens with the census. And the ISM manufacturing, which sparked all the concerns about recession, seen strengthening, but still remaining below 50, which suggests contraction in the manufacturing world. The Fed will have some indication of this data ahead of time. What it won't have, though, is any indication of how the most important issue of all, the trade war between China and the U.S., plays out in mid-November when Presidents Trump and Xi are likely to meet in Chile. Put it all on the hopper. Global economic weakness, softening U.S. indicators, and uncertainty over trade, and the odds favor a Fed cut later this week. 91% probability in October, but just 19% for another follow-up cut in December. So this idea of a Fed pause after this third rate cut has now become the market's central forecast, and the Fed probably going to endorse that by signaling future moves happen meeting by meeting. But it sure wouldn't mind having more data in hand at this meeting before making that call, guys.